Good morning, guys, and welcome to the show. Glad to have you guys here. Today is Tuesday, March 5th, 2019, and let's talk about the next recession. You know what? They all agree a recession's coming. They know it. They can see the slowdown. I mean, that's obvious. That's the obvious. But an awful lot of them, about maybe 6 months ago, they were saying it was going to be like 2023, 2024, we're going to go into a recession. And then they revised it to 2021, just a few days later. And now they're talking about us going to a recession in 2020, So they're moving the date closer and closer. These guys that are talking about recession, I'm here to tell you it's even closer than that. I don't think we're going to escape 2019. Now, let's talk about what's going to catalyst starting this recession. Well, right now, what we got going on is we got a huge slowdown, just beginning, in the real estate sectors of a lot of different countries. Okay? Canada, Australia, the city of London and the United Kingdom. It's all over. The United States is real estate's starting to slow down. And China, the bubble's just starting to burst in China, in the real estate. Now, the manufacturing sector is undergoing a slowdown in most countries. There's a few countries that are escaping in the manufacturing sector. I think India is one of them that's escaping, but China is undergoing a huge slowdown in manufacturing right now. The United States, the manufacturing is kind of holding its own just for the moment, but an awful lot of countries, the manufacturing sectors are dropping back. Germany, it's terrible. Germany is almost in a recession. They've almost had two negative GDP quarters. Germany's that close to recession, almost. But what's holding the earth back right now, and I mean, this is a global thing. This is a global recession we're talking about. What's holding things back right now is the service industry. The service industry is still kicking in pretty good into high gear right now, and it's kind of holding the whole thing back. And so what we have is we have the beginnings of a global recession that is day by day intensifying as we move forward. And I don't see any stop for this. I don't see any reversal for this. This is going to lead to something much worse, and that's an economic crisis. And the economic crisis, the way I see it, is going to be centered in Europe. So I'm going to do a show on this later today, and I'm going to give the timing of how long I think we got until we have this economic crisis that starts in Europe and centered in Europe, and what the effects is going to be on the United States of America, and what the effects is going to be on the globe from this crisis. I'm going to do a show on it this afternoon, and I'm going to give what I think the timing's going to be. But anyway, let's get right into this show, and let's get the chart started right here. And let's take a look, and we can see this slowdown starting. If we take a look, it says it begins here on Zero Hedge. The largest property developer in China will sell all homes at a 10% discount. Boom! I mean, these people that bought homes from these developers in China, for investment purposes, they're going to get cut 10% immediately. Okay? Now, if looking down here a little bit further, we can see that, where was it? Let me find it for you guys. Well, thousands fired by Chinese tech companies amid sudden breakout of austerity. But there's one here. Deflationary red alert. Chinese car dealers are slashing prices. And it's not even helping to sell the cars. China is probably going into the hugest slowdown. Now, let me just tell you a little bit about the Chinese and the way they run things. The Chinese government has tight control over the economy in China. So China they have control over where the money goes into all these corporations and stuff in China, and they have very tight control. So they can inject money in, and they can keep an actual collapse from happening. But they can't stop a slowdown in their economy. That's what they can't stop, and that's what they're undergoing right now is a slowdown. They can stop their economy from collapsing. If their stock market starts to collapse, they just turn it off. The Chinese government just turns it off, and then they inject some money in. I mean, everything. They control everything about their economy. So they're not going to undergo a Western-style collapse where financial institutions go broke and stuff suddenly and the whole thing just starts to break apart. They won't have that. But what they will have is what they can't control is a general slowdown in their economy. And that's what we're seeing right now. We're seeing a huge slowdown in the Chinese economy. They cannot control the real estate market slumping down and the homes being worth an awful lot less money because people decide to sell cheaper because they just want out. They want to get their investments back. And that's what we see with them slashing 10% off of the prices of real estate. That company in China, that big company that sells new real estate, they're slashing 10% off the prices of real estate. So we see that going on. Now let's take a look at the markets today and see what's going on. First off, we'll take a quick peek at cryptocurrency here. $127 billion. It's marched back up toward that $130 billion mark. 52.2% Bitcoin dominance, and we see the coins are all climbing today in price. Litecoin is back up to $47.06, and we're seeing the price here at Bitstamp at $37.26 right now. We had a bit of a fall in price yesterday, but we got to take a look at something here. Very important. Take a look. When I go back on the chart here, let me try the 1 day. When we go back on the 1 day, what we actually see is we see the bear market in Bitcoin, and we see that we've never left the bear market. We're still in the bear market. But what we're doing is we're going along on this line here of around price of around 34 to 37, 3,800, maybe 4,000 on the peaks. It's a few little peaks here where it went up to like 4207. And over here we have a peak of 44.25, but we have bottoms too along this line here. We have bottoms around 31.22, another bottom at 32.60. This might be the bottom of our bear market. And we're bouncing along on the bottom right now. That very well could be what's going on. So now let's take a look here at the silver price today. Silver's made its way up 1 penny today, but it took an awful crushing, an awful beating over the last few days, and it's just been sick because gold and silver people, they've defeat after defeat after defeat for years, and it's just getting to the point now where nobody wants to touch the stuff, its sentiment is very poor, but still. When the price dips down like this, you get a lot of people coming in and buying into the market, even though these are the smart people. These are the smart people that are buying it when it's down, The not-so-smart people are going to buy it when it's up. You watch. They're going to buy it when it could even be triple-digit silver. They'll be buying. And you know what, right now, if you were to take some of your, say you're a stacker, if you were to take some of your coins in right now to the silver dealer to try to sell them right now, they'd probably be a little bit on the picky side, and they probably wouldn't even want to pay you spot, or they might want to pay you 10 cents under spot or 50 cents under spot, and they're a bit picky. Like maybe we don't want that coin, or maybe we don't want this, and we don't want that. Even though it's silver, they might say, well, we'll have trouble selling that, and we don't want, they're picky. You watch, when silver gets up triple digits, they'll take any silver you got, and they'll be glad to get it. And you'll be selling it to them for triple digits. Like over $100. That's coming, guys. That's coming. You just got to wait for it, Don't go... Try to hang on right now. Try to hang on, guys, because it's coming. We're heading into a crisis. And I'm going to be explaining this a lot more on a show I'm going to do this afternoon. Now, let's take a look at the Dow futures, Let's pull in here and take a look at the futures. You know what we're seeing on the futures? We're seeing the futures showing it up 39 points today, the Dow, and this has been a head rush of I'm going to call it a sucker's rally, and man, I'll tell you, how much more legs has this got? Well, we're going to have to wait and see. We had a 200-point drop yesterday, but, today we're up 39 points in the pre-market. This is one thing that could have implications that I'm going to include in my show this afternoon about the Dow, and could have implications on the timing of the next crisis. Now, let's take a look here at oil. And what we're seeing is $56.60. And we're seeing the oil price been slowly rising ever since December of last year. Just, the 24th of December, we hit the low price, $43.93. And now we're at $56.60. Okay, so let's take a look now at bonds and rates. And we see climbing bond yields today, except for the short end of the yield curve, which has moved almost nothing. It's almost unchanged. I mean, it's only 0.002%, which is only a marginal. But all across the rest of the bond yield curve, we see yields rising. The most is the 5-year. It's risen almost 2 basis points. We're looking at the 10-year sitting at 2.73, 5 years 2.54, and the 30-year is 3.098, so it's almost 3.1. So now let's move on to the U.S. dollar index. The dollar is still staying in these 96 numbers, 96.70 right now. And it's been basically going sideways today, zigzagging up and down, but basically going sideways. And so earlier we were at around 96.69, now we're at 96.7. So we moved most of the day so far and really haven't moved at all. Anyway, listen. Thank you guys for listening to this market report. Stay tuned to my report this afternoon that I'm planning on producing. It's going to give the timing of when I think the crisis is actually going to get underway. It's getting very close. We're getting so close to it now that I can start to see where the crisis is going to be centered, what the countries are going to take the worst beating from it, and what it's going to be like. We're starting to get that close now. Back when I did my reports 2 years ago, we were quite a ways away from the crisis, and it was harder for me to see exactly what was going to happen. Now that the whole thing's starting to turn over and we're starting to get really close to it starting, I'm starting to actually see just exactly more details. But still, in predicting these things, there's the unpredictable events, the black swan events that can pop up and come out of nowhere, and change the reflection of the whole thing. But see, it's like a giant engine, with many cogs and many moving parts, and it's like looking at how all of this is coming together and trying to figure out what it's going to do, It's very difficult because of all the moving pieces of the economy. Thank you guys for listening. Like and subscribe, and we're going to catch you in the next show. Bye-bye, guys.